All right, speaking of over the top, the hottest tour in town, the Facebook Roadshow. But some investors may be a little too excited about it. Our next guest says Facebook's valuation is significantly overpriced. Brian Hamilton, CEO of SageWorks, joins us now. Significantly overpriced, Brian.
Some historical perspective. When Microsoft went out, they were 5 times sales. Google, if you value them now at a Facebook comparable, would be over $2 trillion in valuation. So Facebook is 25 times sales in their current valuation. It's really unprecedented. So it's not a bad company. It's a good company. They have sales, but you know, you're buying a high-priced stock.
And the big issue is revenue. Where's the revenue growth going to come from? We know that the mobile situation has been very slow. They've been very slow to react to smartphones and people using Facebook online.
Yeah, no doubt about it. But remember, when we go public with a company, we want both entrepreneurs and the investors to win, both of them, right? We want them to come together. So what's happening right now because of the valuation is really the entrepreneurs or the founders are mostly winning. It's not to say, by the way, that I won't be back in a year and the price won't be higher. But if you go in right now, you're buying a richly priced stock. There's no question.
We're hearing a lot of different stories, though. On one hand, we're hearing it's oversubscribed. On the other hand, we're hearing weaker forecasts. Shibani Joshi reporting that insiders are selling this thing already. What are you hearing as far as the interest?
Here's what they did. It was smart. They are basically not offering a ton of stock. They're keeping the supply low, and they're hoping the demand will be very high, so it'll push the price up. But what we're concerned about is what happens in about 6 months or 12 months from now. So remember, you look at these big brand companies. They own their space. It's terrific. But the value is really high. There's no doubt about it.
So the value is what? Based on everybody uses it, and surely the potential is there to tap into that. The problem is they just haven't found a very good way yet.
Right. Well, they're doing well. The sales are going up. And remember, when you look at tech companies, you've got to compare it relatively. They have sales, for one thing. That's terrific, right? They've got some marginal profitability. They're eking out some profits there. But really, look at comparable companies. Remember Microsoft, right? I'm dating myself a little bit. 1986, they go out public, right? And they own the entire software space, no doubt, the whole thing, right? Where is Facebook fundamentally much stronger than Microsoft or other comparable companies?
But that's what I was going to say. This is not really a tech IPO, as it's more of like a socialization IPO or an IPO in the communications specter. As you know, as you can't compare it to Microsoft.
Well, look, that's the claim they're making. But remember, when we buy stocks, we've got to look at what they've done. What's happening here is they're looking at what we might do. And your point's well taken, Ashley. Look at their market penetration. Right? There's only one planet Earth, right? So sales can't go up forever unless they have a market in Pluto or something we don't know about. So if you're an investor, we want the value to be good. It can be a little bit overpriced or 5, 6, 8, maybe 10 times sales, but they're at probably between 20 and 25 times sales. So you're not getting a bargain.
And is there a concern with their filings that they continue to change, you know, the measurements? And that's got to be a concern as well.
No doubt about it. No doubt about it. So here's what's going on. If you're a user of Facebook, i.e. everybody, right, it doesn't mean you're a buyer of Facebook. So you really got to, you don't get caught in the market momentum. Look what's going on. Look at other comparable companies. Historically, for the last 100 years, U.S. Steel, great brands, all these great companies. This valuation is really unprecedented. It doesn't mean it's not a good company. It just means know what you're buying.
Right. I mean, because we said earnings are
it ain't cheap.
5,000 times. It's like trading at like 5,000 times.
Don't even look at profits. You're right.
There's not
Don't look at profits.
Brian Hamilton, you're awesome.
Great stuff, Brian. Thank you. Well, that wraps up your time with us, but there's still another hour of trading.